はい、皆さんおはようございます。
My name is Ogino, and I am the president. Thank you very much for taking the time to join us today. I would like to share the results of the second year of our midterm management plan, Passion for the Best 2026, as well as our initiatives for the future growth, focusing on the recent announcement of acquisition of ORIX Bank as a subsidiary. Please turn to page 3. What I want to talk today is summarized in this page. It boils down to further solidify our earnings structure and accelerate growth. Let me explain the details. Please turn to page 5. This is our assessment of the business environment. Although the Nikkei stock average has been volatile due to factors such as situation in the Middle East, the underlying trend of rising stock prices, rising interest rates, and a weaker yen continues. This environment is driving the sophistication of corporate capital policies and asset management needs, expanding revenue opportunities for our company. In particular, the growing need for asset management against the backdrop of inflation is symbolic of the further progression of the shift from savings to investment, as evidenced by the ratio of cash and deposits to total household financial assets falling below 50%. Please turn to page 6. In this environment, we performed well in fiscal 2025, earning ordinary profit of 234.5 billion yen and a base income of 182.7 billion yen. Now the challenge is to what extent we can outperform the midterm plan targets. ROE also improved steadily, reaching 10.3%. We will continue to achieve even higher ROE by focusing on EPS growth, improvement of a risk and return by business segment, and in addition, realization of growth investments, including ORIX Bank. Please turn to page 7. This page summarizes our results by segment and the challenges for further profit growth going forward. First, as indicated by the double circle, the wealth management segment's ordinary profit is already above the midterm plan target at 112 billion yen. However, we believe there is a significant room for even bigger growth in our approach to total assets, including customer liabilities. We will fully leverage the banking capabilities of ORIX Bank as a subsidiary to deepen our total asset consulting and substantially expand stable revenues. The asset management division has a triangular mark with 65.4 billion yen in ordinary income. This was due to last year's recognition of impairment losses and provisions related to alternative asset management investment. This division aims to grow AUM and revenue, but we recognize that the challenges lie in strengthening competitiveness in the investment advisory sector in the securities asset management, achieving sustainable AUM growth utilizing private funds in the real estate AM, and transitioning to an asset management business by introducing external capital in the alternative asset management. We will implement measures to address these challenges. In the GM and IB division, global markets recovered significantly in the second half, and global investment banking also posted a record high ordinary income, delivering a combined ordinary income of 58.9 billion yen. Going forward, we recognize that this is important to accurately grasp changes in global capital markets and translate them into sustainable earnings growth opportunities. I will explain how we are going to address these challenges in the following pages. Page 9. This shows the market potential based on the Japanese equities expected return. Against the backdrop of a transition to an inflationary economy, Japanese equities are continuously expected to deliver long-term returns, taking into account not only corporate earnings growth, but also the strengthening of shareholder returns. we estimate the long-term expected return on Japanese equities to be around 8.5%. Applying this to our firm's forecast, which projects Nikkei 225 to reach 67,000 yen by the end of 2026, suggests that the index could reach approximately 300,000 yen by 2045. The right-hand chart shows projected household financial assets. Household financial assets in fiscal year 2045 are projected to reach approximately 4,700 trillion yen, roughly double the current level, while the securities holdings are expected to expand to about 4 times their current size. We believe the shift from savings to investment will gain even greater momentum going forward. Please see page 10. Next, I will explain the acquisition of ORIX Bank as a subsidiary. To date, we have continuously worked to enhance our total asset consulting services under the banner of maximizing customer asset value. In the meantime, we have received requests from customers and our sales staff for many years to ramp up our lending and trust services. Our group established Daiwa Next Bank 15 years ago. However, that bank serves strictly as a gateway from savings to investment and operates a market-oriented business model. Daiwa Next Bank invests collected deposits in securities and current accounts with the Bank of Japan and does not possess trust or full-scale lending functions. Building these functions from scratch in-house would require a tremendous amount of time and cost, including professional personnel well-versed in credit screening and trust operations, as well as building the necessary systems. On the other hand, ORIX Bank possesses a high level of expertise, particularly in real estate-related lending, and has established a proven track record and extensive network in both the lending and trust sectors. We determined that ORIX Bank would be the best possible partner to complement the functions we lacked, and we started continuous dialogue and discussions several years ago. We have now finally succeeded in realizing this vision. While this is our largest investment to date, we are confident, based on our ongoing dialogue and detailed analysis, that it will significantly enhance our value, and we made this decision as a strategic move to seize the opportunity. Now I would like to explain the key points that have drawn particular interest from investors and analysts since the announcement. There are 3 key points to this transaction. First is the further deepening of our comprehensive asset management business model. Second, this is the best integration model that is expected to add 35 to 42 billion yen in pre-tax profit. Third, the transaction will lead to a nonlinear improvement in consolidated earnings and ROE through the strategic use of a capital buffer. This acquisition is funded entirely with our own capital, so there will be no dilution. ORIX Bank's average net income over the past 5 years has been approximately 20 billion yen, and even after factoring in goodwill amortization, we expect both our net income and ROE to rise from current levels starting in the very first year. On the annualized basis for the first year of the acquisition, even without any synergies, we expect net income to increase by 12 to 14 billion yen, and ROE is expected to grow 0.7 to 0.8%. Starting from there, by FY2030, we expect a positive impact of 36.5 to 43.5 billion yen in the net income and a 2.1 to 2.6% boost in ROE. Beyond the cash flow improvement, further upside is expected, including spillover effects to securities of business through the strengthening of lending and trust functions. Please see page 11. At Daiwa Next Bank, securities, securitization loans, and government loans account for about 66% of the total assets. Furthermore, the cash and deposits reported on the balance sheet consist primarily of BOJ's current account, with a balance of approximately 1.8 trillion yen. In other words, the bank is not fully investing customer deposits. On the other hand, at ORIX Bank, about 61% of the total assets is investment property loans, while cash and deposits amount to only 0.3 trillion yen. Thus, a loan-to-deposit ratio is over 100%. On the liability side, Daiwa Next Bank's liabilities are mainly ordinary deposits, while ORIX Bank's liabilities are mainly time deposits. Their characteristics are highly complementary. We believe that a merger with such a high degree of mutual complementarity on both sides of the balance sheet is an extremely rare case. As a result, the new bank formed by the merger will have total assets of approximately 10 trillion yen and a well-balanced balance sheet, combining loans and securities, as well as ordinary deposits and time deposits. Going forward, in addition to Daiwa Next Bank's excess funds of over 1.5 trillion yen, we aim to collect about 2 trillion yen in deposits by offering competitive deposit interest rates and so forth, and by allocating a total of 3.5 trillion yen to highly capital-efficient investments, we will achieve a sustainable improvement in our cash flow. Page 12. This slide describes how we plan to allocate investment funds of 3.5 trillion yen. 1.5 trillion yen to real estate-backed loans, 1 trillion yen to securities-backed loans, and 1 trillion yen to others. I would like to emphasize that both real estate-backed loans and securities-backed loans are secured loans. While their capital charges under the Basel regulations are relatively low, profitability is high, making these assets highly capital efficient. By allocating 3.5 trillion yen to profitable and capital-efficient loans, we will generate pre-tax profit potential of 35 billion to 42 billion yen from the cash flow. Furthermore, we will pursue a higher ROE by reinforcing our consulting capabilities through the integration of ORIX Bank's trust and lending functions, as well as by benefiting from spillover effects on our securities business. Page 13. With the acquisition of ORIX Bank, our scope of approach will expand significantly to include not only the entire financial assets, but also the real estate, wealth and business succession, and even lending. In particular, by effectively utilizing bank loans, we will be able to provide funding and risk diversification to high net worth clients with unbalanced portfolios without selling their assets. We will also be able to support more sophisticated cash flow management, such as investments in future income-generating assets and securing of funds for tax payment. As you see in the right, we have been a pioneer in the industry in shifting from a brokerage-centric business to an asset management business model. Having ORIX Bank as a subsidiary, we will be well-positioned to manage total assets of our clients, including the liability side as well. This way, we are going to evolve from asset management business into a comprehensive asset management business model, thereby dramatically expanding the growth potential of our wealth management business. Please see page 15. Next, I would like to explain the expected synergy effects. Against the backdrop of a shift to a world with interest rates and with the competition for deposits intensifying further at present, you may wonder whether we can really grow the deposit balance. Daiwa Next Bank has increased its Japanese yen time deposits by approximately 660 billion yen over the past year, steadily enhancing its capability to acquire deposits. Until now, Daiwa Next Bank has primarily served as a repository for idle funds associated with securities trading, and the penetration of time deposits among retail customers has been limited. Also, Daiwa Securities has not necessarily been active in promoting time deposits. As a result, the number of yen time deposit accounts stands at 80,000 or so, representing a mere 2.9% of Daiwa Securities funded accounts. Consequently, there is considerable room for growth in time deposits alone. Furthermore, we expect that ordinary deposit accounts will grow in balance as they park more and more idle funds for securities trading as a result of a shift from savings to investments. Furthermore, over 1.5 trillion yen BOJ current account funds held by Next Bank will become executable promptly after the share transfer, without waiting for two-bank integration. For this reason, we can confidently expect synergy effects to materialize very early. This is another key point of this transaction. Page 16. The majority of our properties financed by ORIX Bank's investment real estate loans are located in Tokyo and the Kanto region. Although Japan's overall population continues to decline, the number of single-person households in Greater Tokyo is predicted to keep growing. Driven by rising demand for rental housing due to soaring prices of owner-occupied homes and growing interest in a real estate investment as a source of personal income, we expect the investment property loan market to remain robust over the mid to long term. Until now, ORIX Bank has consistently maintained a loan-to-deposit ratio above 100%, which has left it with no choice but to control its loan balance by curbing lending and by receivables securitization. However, by leveraging the abundant capital of Daiwa Next Bank, these financial constraints will be significantly alleviated. Going forward, we will make the most of ORIX Bank's industry-leading track record and robust network with real estate agents to steadily expand our loan portfolio. Please look at page 17. In recent years, the number of listed companies introducing stock-based compensation plans has increased significantly. More than 2,000 companies have restricted stock RS scheme. In fact, against the backdrop of a robust equity market, the market value of stocks held by individuals has risen substantially. In this environment, there is a growing need to raise fund or diversify portfolio risks while receiving dividends without selling holdings. Daiwa Securities has so far operated securities-backed loans conservatively from a capital allocation perspective. By securing a stable funding base under the new bank and establishing a framework capable of offering competitive interest rates, we will significantly expand our securities-backed loans, a product in high demand among retail customers, and accelerate our ability to capture revenue opportunities. Please see page 18. Here, in the context of a strengthening securities business in a world with interest rates, let me share an example of Morgan Stanley in the United States to illustrate the importance of the banking functions and their significant impact on the business performance. Since the Lehman Brothers shock, Morgan Stanley has been strengthening its banking functions by strategic acquisitions. As a result of achieving a high efficiency through low-cost operations without a branch network, the combined pre-tax profits of its two banking subsidiaries have expanded to account for 40 to 50% of its consolidated total, demonstrating an extremely strong presence. Over the past decade, the combined deposit balance of the two banks has expanded significantly to 64 trillion yen, 2.6 times the previous level, while the loan balance has grown to 43 trillion yen, 3.4 times the previous level. Notably, approximately 80% of the deposits and 70% of loans are linked to clients of the Wealth Management Division. As we promote total asset consulting centered on a goal-based approach, the importance of lending functions such as securities-backed loans and real estate-backed loans is growing even more. In proposing optimal portfolios, incorporating deposits as risk-free assets is a natural step, and at the same time, those deposits serve as a stable source of funds for customer loans. Even in the United States, where deposits account for only 11% or so of household financial assets, acquiring deposits has a significant impact. In Japan, where deposits account for just under 50%, their importance is very clear. By leveraging the client base and sales infrastructure of the wealth management to expand deposits, and by circulating those funds into loans, a business model is established that enhances profitability and problem-solving capabilities, while maintaining a capital efficiency, thereby creating positive spillover effects for the securities business. Against the backdrop of a shift toward a world with interest rates, client needs are also shifting from traditional brokerage services to total comprehensive wealth management in Japan. The Morgan Stanley case study clearly demonstrates the direction the securities business should aim for. Page 19. Now I would like to talk about each division. First, Wealth Management Division. Since the launch of a total asset consulting, asset inflows in the Wealth Management Division have continued to trend upward for both retail and corporate clients. The right chart shows cash-funded purchases and deposits by product, indexed with the first half of fiscal year 2020 set at 100. Wrap accounts and equity investment trusts have increased 4 to 5-fold, and Japanese yen time deposits have doubled. The growth has been funded by fresh cash. We will continue to consolidate our business foundation through the sustained inflows of assets and fresh money. Page 20. Revenue and customer assets are both growing steadily. With respect to our corporate clients, primarily mid-market companies that hold accounts at the Wealth Management Division. We believe there remains significant growth potential. As shown in the right, through interdivisional collaboration, we continuously provide advanced consulting services to a wide range of our clients, including unlisted companies and corporate owners. These initiatives not only provide added value to our clients, but also lead to the expansion of revenue opportunities across the group. We will continue to further strengthen interdivisional collaboration and accelerate the expansion of our corporate business to drive the growth of the entire group. Please turn to page 21. I will now explain the Asset Management Division. First, Securities Asset Management. Assets under management, AUM, of this segment increased by more than 10 trillion yen over the past year, reaching 44 trillion yen as of the end of March 2026, thereby achieving our midterm target ahead of schedule. Consequently, ordinary income has also expanded significantly. The investment advisory business had been a challenge, but we began strengthening this business by capital and business alliance with the Japan Post Insurance, including the alternatives. As a result, our ranking in terms of investment advisory balance has improved from 67th position to 28th position in the industry. We will continue to strive to further strengthen our competitiveness by differentiating ourselves and enhancing value-added services in the investment advisory sector. Page 22. This section covers real estate asset management. Real estate AUM has grown steadily, supported by private fund formation at Daiwa Real Estate. As of the end of March 2026, the portfolio reached nearly 1.8 trillion yen. Early achievement of FY2030 target is already in sight. Our group's portfolio consists primarily of mid-sized offices and rental housing, which are resilient against inflation. Even amid inflation and rising interest rates, we have been able to increase rents for stable performance. Furthermore, an equity method affiliate, Samty Holdings, is transforming its business model steadily through M&As and fund formation since it went private. We will continue to expand our AUM via private funds and other means. Page 23. In alternative asset management, we are transitioning from a proprietary investments to asset management model supported by external capital. Daiwa PA Capital established a fund totaling 26 billion yen in 2024 and has executed 5 investments to date. We will continue to expand our fund business through formation of a series of funds on a scale of tens of billions of yen. At Daiwa Energy and Infrastructure, we are accelerating a transition to a fund business under the initiative of the newly established Fund Strategy Promotion Office. As described on page 24, Daiwa Corporate Investment is also gaining momentum in business expansion in Vietnam. Page 25, GM and IB Division. Global markets showed a big recovery in the ordinary income in the second half of the year, and the momentum must be maintained to ensure sustainable income growth. We will strive to increase the revenue by focusing on client base and solution capabilities. More specifically, we will strengthen Japan equity business targeting overseas investors and enhance our outreach to large corporate clients through the expansion of our client base and the cultivation of close relationships. In FICC, we will accurately identify client needs amid rising interest rates, strengthen asset and risk management, and drive revenue growth. Page 26. Global Investment Banking. Opportunities for investment banking business are structurally expanding both in Japan and overseas. The revenue opportunities are certainly growing, driven by diversification of funding methods and an expansion of M&As at home and abroad. In particular, we view M&As as a key area that will drive mid to long-term growth. In addition to strengthening our domestic and international M&A organization, we will ramp up our deal sourcing through closer relationship with private equity funds and operating corporations. Furthermore, while leveraging our overseas DC advisory network, we will increase our engagement for cross-border deals, thus growing a group's M&A-related revenue to 100 billion yen by fiscal 2030. Please turn to page 27. I will now explain the initiatives in the other segment. Yesterday, we announced investment in Airborne Capital, a co-shareholder of Daiwa Airborne. Airborne Capital possesses a high level of expertise and a proven track record in the aircraft leasing and investment sectors. By strengthening our collaboration with them, we aim to broaden the scope of aircraft investment opportunities in Japan and capture market growth. We are also partnering with Airborne Capital on Japan's first open-ended aircraft fund. In addition to providing new investment opportunities to institutional investors, we will achieve further growth in our asset management business in the alternative investment sector, leading to expanded revenue opportunities for our group. Page 28. I would like to mention our AI initiatives. We have rapidly deployed AI environments, and many employees have adopted AI in their daily work. Going forward, we will transition from a phase of heavy use to a phase of full integration of artificial intelligence in business and operational processes to deliver real results. We will focus on PL value-driven utilization through operational efficiency as well as revenue growth and cost reduction. Page 29. We will offer the AI solutions we have validated and refined in-house as a service to many enterprise clients of a Daiwa Institute of Research. For example, we have begun offering our services externally through collaboration with Kyoto Financial Group, which was announced on March 25th. By promoting these initiatives, we will monetize our AI expertise as a new service and drive growth across the entire group. Next, I will explain our financial and capital policies as well as our approach to capital allocation. Please turn to page 32. As I have consistently stated, there is no change to our policy of promoting a financial and capital strategy that prioritizes a balance between growth investments and additional shareholder returns, while firmly maintaining a financial soundness as a fundamental premise. Although the acquisition of RX Bank temporarily lowers our consolidated total capital adequacy ratio to around 14%, we will create a positive cycle in which we steadily accumulate profits over the period, including this acquisition, and use those profits as a source of shareholder return and next growth investments, thereby making even more profits going forward. We are aware that there is a strong interest in what we consider to be a comfortable capital level. But given that foreign currency translation adjustments currently account for about 2% of the regulatory capital ratio, we must also consider the need for a certain buffer and impact on credit ratings. Growth investments are essential to achieving sustainable growth for the entire group. We will continue to seize growth opportunities and materialize return on investments, while strictly managing the ROE for each business segment with the aim of continuously improving ROE. Finally, this fiscal year is the final year of our midterm management plan and is truly the year we bring everything to a close. Looking ahead to the future, we aim for sustainable growth by striking a balance between short-term priorities and long-term initiatives. We believe this is the strategy our company should execute. The acquisition of RX Bank is an extremely rare investment opportunity to acquire 100% ownership of a bank that owns lending and trust functions, and we are confident that it will become a valuable asset as a driver of the future growth. This is an extremely important and strategic move for the group to leap into the next stage of growth. As I mentioned at the beginning, in line with our basic policy of maximizing a customer asset value, we will further consolidate our revenue structure, which is more resilient against external environments. We will make 2026 a year of laying the groundwork for accelerating growth in our next midterm management plan, which begins in fiscal 2027. We look forward to active engagement and dialogue with investors and analysts, and we sincerely appreciate your continued support. Thank you for your attention.
ご清聴ありがとうございました。